In 2009, when the market crashed, I was a financial advisor. I would have grown men and women. I mean, I'm talking 65 plus come into the office. The wife comes in and she's like crying or sobbing, and they're asking the question, am I going to run out of money? And the answer was yes.
With only 35% of Americans working with a financial advisor in 2022, the question arises, should the average investor seek their guidance? Our guest, Corey Peterson, a former financial advisor turned real estate multimillionaire, shares firsthand experiences that will shed light on the limited scope and sales-oriented nature of financial advice. If you've ever wondered why the rich manage their own wealth and what they invest in, keep listening and get ready to challenge conventional wisdom and gain a fresh perspective on building wealth. In your opinion, should the average investor use a financial advisor?
I personally will say yes because but it's all depends on what the average is, right? So if it's, yeah, the average person that's not making, a whole lot of money and not a business owner, the wealthy don't have financial advisors, by the way, right? So that's the difference. Or the true wealthy, they manage their money. They understand control is more important, right? But there is coming from that background, though, there's trillions upon trillions of dollars in the market, brokerage type of investing. In fact, that's what most Americans do. And so, and that's from, and that is even a lot of business owners, because business owners make money, and the challenge is they all have the same problem. What do I do with my money? Right. And so if they don't know how to, if they're busy working in their operations and they truly are dedicated to their craft, their biggest thing is they don't have time. And so a lot of them know they should do real estate, but the challenge is they don't have time to become an expert. And, because experts make money and generalists make excuses. And so we want to be experts. And so, and that's what I've become over my 20 something years of being in real estate. I'm an expert, and because of that, I know how to make money grow. And your average investor is going to go out there and he's going to probably work with a stockbroker because he should be working with somebody. But I find that what people really want is more control of their investments, and I think um, that's what real estate, the syndications that we provide, allow people to do that. They get the benefits of the real estate, but they don't have to do the tenants and the toilets and the management. But they still have a little bit better control of their investments than they would in the stock market.
Yeah, and so I mean, if you want to expand on the definition of a financial advisor or planner, but my understanding is just someone that really is sort of being like a guide and being in charge of that person's wealth. But
Oh, you're
that
being
that that
nice. You're being nice.
yeah, please add to it or butcher that.
I would call it a licensed salesperson.
Yeah, so that's
So
something I want to dive into for sure. So we can definitely get into that later. Now that that's been clarified a little more, in the past you've also mentioned that the motives behind financial advisors might not be as client focused as they might appear. What is the truth behind financial advisors and maybe their motives not necessarily being client centered?
well, I don't want to hate everybody to hate on me, right? But I can just tell you from my experience. This is my own experience, right? Not I'm sure not everybody's like this or every firm's like this, but the firm that I worked at, when all the brokers got together, all they talked about was how much commission and monies they're making. They honestly, well, let's just say it's commission based, right? It's all about assets under management. And now we've all been classically trained at that point to, give a diverse portfolio, stocks, bonds, and mutual funds. And I think most investors do that. They do what they've been taught. I did the same thing, right? I could look at your risk tolerance and say, what's your time horizon to retirement, and put together some kind of plan that will somewhat make sense. But I'm really a salesperson, right? There's different types of salespeople, and I would like to think that there's different levels. So when I was with Edward Jones, we sold A shares. That's what they really wanted. It was an upfront load, and that was between 3 to 5%. So someone comes in with $100,000, they're going to get charged like 5.75, or maybe it's 4.75. I can't remember, but right off the top of their investment. So they go negative. I mean, They went from 100,000 to 95,000 the day they make the trade, and that's how Corey would get paid. And it's like how many $100,000 or tranches, 100,000 or 200,000 rollovers and things like that can you get into your account in a month? And the goal was to get $2 to $3, $4 million every month. Now, and that's A shares. And now where I've seen the industry go though is to more in what's called advisory, financial advisory, and that actually is a little bit better. It's not such an upfront sales commission, but it is a commission for life, right? So it's between 1.5% for all your assets under management for the life of that, as long as you're with that firm. And so those can get expensive because you're thinking of 1.5 for the 10 years, 15 years, 20 years. It's actually a lot more than that first upfront load, right? When you really think about it. So, um, so every financial advisor always talks about their book, right? And so, but here's the thing: it's the only place where wealthy people, rich people, they talk to a stock broker, right? Someone that's broker than them. And it's the craziest thing is where multimillionaires go take advice from someone that's making $70,000 a year, $80,000. I mean, starting off as a new FA financial advisor, I think I was making like 80,000, 85,000, right, first year in the business. Who am I to give advice? Yeah, I passed the test. It took me all day to pass the test, 8-hour test. I understood stocks, bonds, derivatives, shorts, puts, calls, all that stuff, right? But doesn't mean that I'm an expert. I was a trained salesman to sell from a brochure of the Growth Fund of America. It has 74 years of history. And this is why I think you should give me all your money today.
Yeah, I mean, I think there is some reassurance that at least there's a test, right? But that I was going to bring that up. There's that quote that I don't remember exactly what it was, but it was something along the lines of Wall Street, or in the arena of financial advising, is the only time multimillionaires who drive a Mustang will go take advice from someone who drives a Honda, something like that. Which I've always thought that was a really accurate uh,
It
mental
is.
image of it.
Just think of Wolf of Wall Street, right? I just think of Matthew McConaughey. Your goal is to get their money and put it into your pocket, right? You get a license. You get a Series Sevens. Well, there's different licenses out there, but I had a Series Sevens.
You said that you had some. Ideally, they'll have a business background or some business knowledge. And I know you did when you went into it, but that's not
Usually,
always the case,
brokers are
right?
looking for that, or they're looking for someone that's in, going to finance, or someone to college degrees, or like. But Edward Jones was more focused on someone that had business owner experience, business, because that's what you're doing is running a business, right? And the Edward Jones model is you worked for yourself on your own, and then you'd get into a branch. And it was I started off as a new, which I had a laptop, and a printer, and a name to stand behind, and an idea of where my office was going to be. I went door knocking almost every day for like a year and a half. Right, I went into neighborhoods and be like, "Hey, this is Corey Peterson with Edward Jones. I'm getting ready to start an office right over here in the corner of Warner and Chandler Heights, and I wanted to, get out in the community and get to know the people. How's the stock market treating you?" Right. From time to time, I come across some good investment advice. I would love to share it with you, and if you'd like it, can I get your information? And that was what I did every day. And then you start working. What's the other pursuit of happiness? Pursuit of happiness, right? Where you start learning, like, hold on, I can stay. There's different doors you can knock on: the expensive houses or the small, cheaper houses. You start learning, you go up in value as fast as you can, and then you start knocking on businesses, right? Businesses are the real investors that have money.
Yeah, based on your background and what you're sharing, it does seem very evident that there's a lot of sales that goes into like being a financial advisor, and that really leads me to my next question and the point I would love it if you could expand on. A financial advisor's advice is going to be limited, and they're not going to share certain investments because they're incentivized to encourage their clients to pursue certain types of assets. Can you
Well, yes and no. It's more about selling away, right? So there's some rules. You can't sell what your brokerage does not offer, right? So And so if you do not offer real estate, you'd offer a REIT, a real estate investment trust, but you would never offer real estate. No, in fact, I don't think most brokers do because it's very illiquid. It doesn't trade on the trading desk, right? On a market, on an exchange. And so they don't like those, and so they don't offer them. So that means that the broker cannot, whatever the broker dealer, which is the company behind the broker, right? That's what they can offer to sell, what securities they can sell, and so they can't even talk about it. And so how can they give you advice? So when I'm taking people's money in, or like in because most people's money is in, at least the pool of money that I tap into, the kind of investors that I talk to are in the stock market. They have IRAs, right? Retirement money. They've worked for Intel for 20 years and retired, and they've got $2 million and they need to invest it, right? And they're in the stock market currently, and they want to get out. They want to diversify. And so what we allow them to do is give them a portion of their money and come into a deal with us, and it's definitely a lot different. But the main piece of that is that I think people want options. They want more options than not, and they just want. I think they want more control, right? Because we think about the stock market as the roller coaster. It goes up and goes down. No one knows when or why. It seems as it's politically charged and motivated. It doesn't follow any set course or path or rhyme or reason, and people can't really deal with that. Especially when they, if you think about this, when they get closer to retirement, are people less afraid of risk or more, or more afraid of risk, right? They're more afraid of risk. They want less risk. They don't want the choppiness. And so to do that, you move into safer investments where they're called bonds, right? Bonds are relatively safe. They pay a coupon. Um, but bond values fluctuate. And so people, they buy a bond for the income, but when they're looking at their statement, they're seeing the value fluctuate. And when so in other words, like right now, if you bought a bond 4 years ago, probably at like 1%, the bonds that are being offered now are like 4%. So your 1% bond is worthless. It has no face value. And so people look at that and they're like, gosh, I can't win. And so what I think what real estate does is it gives, it's real estate, right? Like when you buy these apartments and they have people and tenants, it's like a little city, and the city works and it creates income and it spits out profit, right? If you manage it right and correctly. And so I think that in essence is what we do. And I think we have a lot more control because in the stock market, I couldn't control any of it. I could control what funds you bought, but after that, like how many people does that money touch to the guy that says buy 100 shares of blank, right? Who's that guy? No one knows.
Yeah. Yeah, control seems I think that's a very evident theme in this conversation as well. Control is something that a lot of investors, of course, like you've highlighted, are really motivated by that. And right now we've experienced and witnessed a lot of volatility in the stock market. And it reminds me of, I know, another time
Well,
that
even in our
investors were
market too,
experiencing
though,
that.
too, Kerwin, right? So listen, it's not been all sunsets and palm trees. If anybody says it is, they're lying right now, right? Interest rates doubled. I have, when I have some loans that were at 4% when we started, and luckily we bought rate caps, but they're at 5.75. That's a lot higher. That affects your cash flow. It's affected some of the returns, some of the distributions that we were making, right? It's not perfect world. Um, but here's the thing: we have levers. We can still um, let go of staff if we do. We can tighten up our expenses. We can be more lean. We can. There's things that you can do in real estate that you just can't do. You have no options besides hoping and praying that the stock market goes up.
Absolutely. And I'm glad you touched on that because, of course, there's still some elements of control when it comes to the multifamily, like you said. But with the stock market, it really is that emotional thing. And it's also like you touched on the illiquidity of multifamily and real estate sort of being a reason brokers are not necessarily pushing their clients towards that. But I could also see that as a plus because it's not as vulnerable to those fluctuations. What would you say about that?
No, I think it's absolutely. I mean, the one thing, real estate's normally fairly pretty steady, right? You can go into a property, you can reasonably say like, why do? And here's the thing: well, ask yourself some real questions. Will a bank let me give me a loan to buy stocks? Right? If the answer is hell no, why? Because it's risky. Banks don't do risky stuff. Will a bank give you 80% LTV on a piece of property at a low rate compared to what private equity is? The answer is yes. Why? Because they found that it's a lot less risky and they'll give you millions. You want to make money? Get in debt, right? That's the new way. Robert Kiyosaki is like, debt. That's how I do things. I get into debt. I'm in massive debt, right? I have to be in debt to be able to buy assets that over time are going to increase in value and operate. And in the commercial side, it's not like the single family home side. Single families, you're hoping the market works, right? In commercial, it's all about the profit and loss, the NOI, net operating income. So how you maneuver your NOI and increase it, you can do it by two ways: lower expenses or increase profits, right? And we do a combination of both when we buy properties. And the goal is to squeeze your property and get it very lean and efficient, right? And then drive rents as high as possible. That's our goal. That's what we try to tell our investors, that that's our job of good, property owners. And the result is we make returns for the investor.
100%. I'm happy you brought up the stocks and their the fact that banks won't necessarily lend on them. And it's funny because financial advisors will encourage their clients to pursue what you've referred to as paper assets. And I wanted to know, like, just personal question: do you invest in paper assets, and also can you define what paper assets are? But if you do
Yeah,
or don't, can you explain why?
I don't, because I don't believe in the stock market. Like, why would I do it? I make much more money with me doing what I do. It makes no sense for me to invest a dollar in that. Now, to my kids right now, yeah, right. Do I have retirement? I opened up 401ks, Roth IRAs for both my kids, right? And I contribute the 5 grand everything is 6 grand every year, right? Um, and listen, I may do it for probably till they're 25 and then shut it off, and one day they'll have millions of dollars just because, right? And they won't even touch it. But there'll be a time where that money gets to a value where it's probably more makes more sense for them to invest in dad, or they can't invest with me because they're direct relation, but I'll have a buddy that they can invest with, right, and make some returns.
Yeah.
But paper assets is anything really. That's what stockbrokers is: stocks, bonds, mutual funds, CDs. You know, it could be even insurance products, right? A lot of people sell insurance as an investment, which I still have never understood yet. I'm buy term, invest the difference. Um, I probably always will be. I think investments should be investments. I think insurance should be insurance. I wouldn't commingle the two personally, but I know a lot of people do, and maybe I'll change that one day when I understand that I need a wealth transfer. But I still think that I should be able to do it um, without having some kind of crazy insurance scheme. I'm not there yet. I'm still working on that one. I'm still learning. I'm getting to the age where I got to start paying attention about my wealth transfer. So those are things that I'm looking at right now. Just trying to like, how do I do it correctly? How do I get it around the right smart people that don't just want a commission? That's what I'm so afraid of. Because I know when I was a financial advisor and I sold any whole life or universal life or whatever life insurance, I'm telling you, I hear stories of financial advisors saying, dude, I just pulled a three banger, which is like $3,000 or $5,000, right, on this one policy, right? That's because they're raping everybody, man. Those things are super expensive, and it's like, who's getting paid to sell this crap, right? And man, and they just, oh, this is going to be really good, and they're like, it's not really good for the. I mean, even though I guess it's okay for the investor, but I'm like, God bless, right? So what I need in retirement, if I've done it right, is not more insurance, right? I'm hopefully, if I've done well, I have cash. I don't need insurance. I have cash. But
Yeah.
who knows? We'll see what
Yeah.
happens when it's all done.
And we did touch on 2008 and like what happened then, but this next question I really want to dive into is twofold. I know in 2008, once that happened, you were in the financial advising and planning industry, and things kind of took a turn for the worse in your business. And I think there's maybe some revelations that you realized about the industry of financial planning and advising that I would love for you to really expand on. What did you learn about the reality of financial advising? But also, I think there was some lack of autonomy and maybe intentionality with your clients who were ultimately they are responsible for their own finances. So, what mistakes were they making on their end as well?
Well, so it was just timing for them. So here's what you're referencing is like so in 2009 when the market crashed, I was a financial advisor, and this is when my heart. I thought I was going to be a financial advisor for a long time. I had kind of given up on my real estate dreams and goals, but because I was really working on, and it was working until the market crashed, and then I realized that I truly had no control on anything. And I would have grown men and women. I mean, I'm talking 65 plus come into the office where the wife comes in and she's like crying or sobbing. You just tell she's kind of a little teary, and the husband just looks distraught. And they're asking the question, right? And the question is, am I going to run out of money? And the answer was yes. If you keep living this way, I don't think you're going to make it. And that's everybody's worst fear, by the way, is running out of money, which most people have planned not well. They've not planned well. And so they were in real dire straits. And all I could do was look at them and say, it's the market, right? Eventually they said, well, and stay the course, right? Because you're still properly invested. You just need to change your lifestyle a lot right now and let this market come back, which it did, by the way, right? I mean, it went to a new record. But do you think they got any of that upside? No. Why? Because their emotions got to them and they said, move everything into cash or into money market. And to move that money, I have to charge them another fee. Man, you want to talk about adding injury to insult. And there's just a point in time where you're just like, I can't do that anymore. Like I don't want to be a part of that anymore. And so once I kind of made that decision, I was like, my heart left the business, and which was the awakening of what I do now, right? So I got fired from Edward Jones because my numbers. That's why it's a sales job. Okay, when your numbers are down, and you're not producing, not bringing in new revenue, get fired because the revenue of new money brings in is what keeps that door open because my heart left the business. I couldn't look at people knowing that I had no control, right? And so the day that I got fired, it was I knew that it was going to happen. I showed up at 8 o'clock, and my secretary couldn't look at me, and I was like, "Dude, it's on. I'm getting." I had a meeting at 10. I knew that I was going to get gone, and so I remember that's in my office. I sat by myself, and I was like, "What do I really want to do?" And I knew what I wanted to do. This little kid that used to think that he could do or be anything that he put his mind to activated. And he was like, put me in. And I'm, was wrestling with the 32-year-old version of me saying, I got a wife, a kid, and a family, and a house mortgage. Like, I got to still make income. But I'm going to tell you, the little kid kicked that grown man's butt. And I walked out of there like Rocky. I was like, I'm going to go do it. And I didn't know how I was going to do it. I just knew that I was be willing to do it, whatever it took. And that was the biggest shift I had ever made in my life was the moment that I said, I will not accept anything less than ultimate win, and I will never quit. Will never quit. And that's what it takes. Honestly, that type of you see it all the way in all the time in all different shapes and forms in professional athletes, sports, businessmen, people that have money. That any investor that's done well, right? There is a common denominality amongst all these people is they got so focused on what they wanted to achieve that all the obstacles that got in the way, they just went around them, over them, under them. That all they did was kept their eyes on the prize of the goal, and that is what it takes to be successful in anything, my friends. is that relentless goal and pursuit of that which is important.
Your story has such a, I mean, obviously there's so many facets that are really strong hooks, but I think one of the best hook points about your story is like it's almost this transformation from financial advisor to real estate multimillionaire, and that's just it's such a cool and also very inspirational. I think it also shows in terms of like the growth, but also the change that goes from being someone who's advising on certain types of assets, paper assets, to being an owner of hard assets, real assets.
I
I would
wanted to
love
be
to
the guy
know.
that was coming into my office, right? I mean, that's what I realized. It's like I want to be that guy, right? Once you start paying attention to the world, right, and you say, like, listen, I can pinch out a piece, but how do I do that thing over there? And you start realizing that owning a business is where it's at. And then, Rich Dad Poor Dad with Robert Kiyosaki is the one that opened up the world, it opened up my mind of what is possible. And as once I chose that course and I decided that that was the going to be the course, that's when my life changed forever.
Yeah, I know you've also talked about how rich people invest in real estate and in businesses, and they typically won't. Maybe sometimes they'll own stock, but it's from the ownership side. And it's interesting because I know people I've recommended they read Rich Dad Poor Dad, and I think a lot of people just want someone to hand off their wealth to and to have them handle it, and they don't want to be stressed out about it. But in reality, the wealthy manage their own wealth. They're
Yeah.
very
And they'll
intentional.
always be broke, right? So like I won't say always be broke, but they'll never be rich, right? Like because look, wealthy people think differently and do different things, right? And when you understand that, um, then you got to pay attention to it, right? And if you really like, just think about from people that are in the stock market. I used to preach 6 to 8%, and every financial advisor that I know is 6 to 8% is a solid return, and because that's the benchmark. And it is very not uncommon for wealthy people to get 20% returns on all their stuff. Why? Because they understand the value and the power of their money, and they make their money work. They'll find opportunities where, like, hey, you want to do this real estate commercial deal? No problem. I'm private equity. I'll fund all your, the bank will give you 70%. I'll fund 20%, the next 20. You only have to raise 10, but I want pref equity. I want first position of all the profits up to blankety percent. And I want to be paid first, and they'll set it all up and they'll gain the system. And by the way, if you screw up, then I get to take over your deal and all this stuff. And people are like, yeah, okay, that's fine. Yeah, I just want to do my deal. And they sign up and they sign up to the devil, right? Smart money. And so wealthy people understand the value of money. And so the sooner you understand it, and for investors too, like the investors that are listening to this is a great asset class to invest in because you do get above average returns, right? Anything but above 12 is great in my opinion, right? Because 6 to 8 is what you're getting in the stock market on average, right? So 12% consistently, 12 to 18, that's nirvana. And that's what we try to do.
Earlier you mentioned, and the reality is real estate isn't this perfect asset class, and there's going to be some downsides. You mentioned there is some sensitivity and vulnerability to higher interest rates. There's ways to mitigate that, but also real estate is known to not be it's to be a long term strategy. It's not a get rich quick scheme. So I would love to maybe know how long did it take you to really build wealth in real estate, and what's your approach to take your best stab at this question? How long does it really take to build wealth in real estate?
5 to 7 years doing something consistently, right? So I bought my first apartment complex in 2009. No, 2011. 2011. So that's what, 12 years, 12 years ago, right? And so I actually become a multimillionaire when I sold that property. So I bought that property, and the first 3 years I didn't make really any money. Right, I barely made any money. Like I didn't even get an acquisition fee. I was just running it. But at that third year, something started to happen. I'm like, ooh, we're starting to cash flow, and I started getting some checks. I was like, this is good. And I started fixing the operations where we're starting to see it. Right, I'm like, wow. That fourth year rolls around. I'm like, we're doing it now, right? Now we're starting to like it was consistently getting some checks. And on the fifth year, I knew that we were doing well, right? And so we bought the property for 3.2. We sold it for 8.8. Here's what's funny: I went and looked at that property and seen where it traded 5 years after that. It traded for like 16 million.
Wow.
If I would have kept it another 5 years, I could have doubled the value again. Don't count. But um, to go from 3.2 to 8.8, it was like 2 point something $1 million in my pocket. And that was enough to set me free. I'm like, I'm free. I could probably, now, not really, but like, but if I invest that in myself, which I did, I bought another deal with it. Um, and that money is growing as well. So that this is I'm coming up my next. I'm getting ready to sell the next project from that. So that 2 million is going to double to four, right? Just on my investment side. But I'm also going to make another probably three or four on top of that from the deal, right? So now, because I invested 50% of the money for that project. It was a $4 million raise, and I invested 2.2, right? So I say that. So I think it's a 5 to 7 year journey to really, when you exit your big first deal, in my opinion, like, and we're talking multifamily, and it doesn't take a lot. Like if you only bought one apartment deal a year, and you did it every year for 5 years in a row, that seventh year, your money, dude, like you would have you'd be doing well. We have 10 active assets right now, 10 active. And we have a staff of now we manage we're vertically integrated, so we manage our own assets now. So we have a staff of around 38 people on the management side. We have a staff of about two, three, four, six, seven on the Kahuna investment side on my acquisition side, and that includes a little bit of staff for my info business as well. Um, so
Yeah.
we pay everybody's salary. We pay good salaries, so we're able to have team and salaries and people and living a life and run a real business now where Corey's not doing all of it, and which is beautiful, right? So you get to buy back your time.
I know our stories sort of overlap especially towards the beginning. Hopefully, you are now, but in the beginning, I know you started wholesaling and flipping, and this isn't necessarily about that, but it's just so interesting that that's kind of like was your one of your first entryways into real estate. And I want to know why. Two questions. Why wasn't flipping and wholesaling? Why wasn't that enough? And do you think that's a good starting point for other people? Like, should they also pursue that?
Boy, it was enough for me because that's where I was at. I had no money, no credit. And I needed to start somewheres, and I was like, "This is the easiest way, right?" And I needed to make money quickly because I got fired. And I didn't even know how to like what I was going to do. I started wholesaling because I was like, I'd go to the RIAs where people that were actually doing deals. I'm like, who's doing deals in here, right? And the guy running the RIA would point out three or four of the top guys. I make sure I said not buy them. I'm like, what do you guys buy at? What's your deal look like? I'm like, I find deals like that all the time. I'm lying, but I'm like, I'll find one. And so they give me their what their success numbers look like. I was great. I'll find a deal at pencils, and I did. I found like 3 or 4 month every month, and these guys bought them and paid me like $3 or $4,000 a fee. And I was like, I'm in the game. But um, but the here's the thing. Yeah, I would. My son's getting into the business right now, right?
Mm.
And guess where I'm making him start?
Wholesaling.
Yes,
Let's go.
I was like, son, this is where you're going to start, right? I need you to learn some of the ropes, right?
Yeah.
And if anything, this teaches you how to find a good deal, be resourceful, right? So the thing about wholesaling is about lead generation and numbers and marketing and like some of the basics of real estate marketing, right? And so from there, um, and probably have him wholesale, learn some do some fix and flips, learn how to raise money. He probably come to the bank of dad. It'll be a little bit easier for him than it was for me. I had to really go out and find money, but bank of dad's probably willing to fund those projects all day, right? But then the ultimate goal is to then to bring them into my company and let them run, right? I'm 50. I got about 15 more years of this thing, and I'll probably do it for life. Like I'll probably be involved in my company forever, but I don't want to run it forever, right? I just want to be chairman of the board, right? I want to have the benefits of what I've done, right? But I really want my goal is to have I want my company Kahuna Investments to live long after I'm gone
Yeah.
and to be generationally there.
Yeah, I know wholesaling for us, I mean, it taught us sales, it taught us how to take rejection, how to just communicate with different kinds of people, persistence. It really was the fun. And we also learned the fundamentals of real estate in general,
Yeah.
which we later applied to multifamily. So,
And the only difference is the difference in the multifamily space is money, right? Money. Money is the biggest difference between the two. In single family, you can do some deals with lenders, and it doesn't take a whole lot of your own money. You can almost borrow all of it to figure it out. In multifamily, you've got to be good at raising capital. That's got to be one of your primary drives to do the deals. You've got to be able to have people give you money. That's a different skill set, by the way. It's
yeah,
totally different than what's in the wholesaling business. And so the reason I made the switch, you asked me why I made the switch, is I understood the value for dollars. Now, also, as a trader, trader, right? Robert Kiyosaki never talked about trading properties, by the way. He always talked about cash flow, right? He always talked about owning them, rentals, right? And so somehow we thought that wholesaling is the goal. I'm in real estate. No, you're not. You're a trader. You're buying and selling. You're in the worst freaking tax bracket ever, right? You do not want to stay there. You want to get away from there as fast as humanly possible. And the way you do that is to start holding real estate long term. And so when I started looking at that version of it, I was like, well, I could buy a single family at a time, or it makes no sense. Let me buy 100 units at a time in one spot. And then I could get the value of the scale of scaling. And so that's why apartments make so much sense. It's still needed and it's scalable where you can buy 100 units in one location and then have
you met,
people manage it and then have staff.
yeah, you mentioned legacy earlier, and I think that's a really awesome note to leave and really wrap this up. I heard a story on a podcast that you did once that you were able to take your whole neighborhood to Hawaii, and you don't have to go into that story, but I just want to know, what has real estate been able to do for you in terms of your lifestyle freedom, time freedom, financial abundance? We've talked a lot about the pros and cons of real estate, but I think a lot of people just want that, like, a little insight into what it can actually do for you from a practical standpoint.
Now, here's my thought. I practice a little differently in that I want to be the guy that no one sees coming, right? I still live in the same house. I'm more like a Warren Buffett. I've lived in the same house for like 16 years. I'm probably not going to move. We may buy, we call it the FU house. We want to buy an FU house maybe one day, but we're like, every time we're like, do we really need it? We don't. So I live in an average neighborhood. You look at my neighborhood like, this is your house? Thought you're a big guy, big deal. I'm like, maybe I am, maybe I'm not, but I love living here. This is where my kids grew up, all my friends, all my neighbors, right? So, what I value is experiences, right? So, where I put money and where I like to spend money is vacations and doing stuff with people. I call it supplier of fun. I like to be the supplier of fun. And part of that was like that trip to Hawaii. All my neighbors, we took six of them. Now they paid for their flights, but I paid for the hotel or our accommodations and a lot of the things we did. Um, and they're great neighbors. They probably would have paid for everything, but it was nice for me to supply the fun, and I wanted to. I wanted to give them the experience of what we felt Hawaii was, and so we totally did that, right? And it was very easy and very fun, and it was not weird, right? And so that's what I like to do. I like to do things like that, right? Vacations. I mean, I plan a lot of vacations. We go on a lot of mini vacations. Like we'll leave on Thursday, come home Monday,
Mhm.
right? And so it's all about living your best life. I think what I've learned is you take your personal life, right? This is what I've learned over a long period of time, and I'm 50 now. But in the beginning, I probably didn't understand this as much because I was grind, right? Very focused. And sometimes, guys, sometimes you have to sprint, and sometimes you can marathon. right? So I get it. Sometimes you got to be very driven and focus and go, 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 right? But you can't sprint forever. And that's why I see a lot of people fail is they try to sprint forever and it doesn't last. You cannot keep up. You've got to learn the marathon, keep pace and just take and go, right? And so I like to marathon more now than I like to sprint. I hate sprinting. I can sprint if I have to, but I would rather marathon and just enjoy, take my time with it, let my company grow organically, recruit great people, um, so I can live the life that I love, which is I take my family life and I put it first. I put my vacations, the kid time to the kids, where we want to go, and anything that we gets on our calendar first. Right? I don't work on Fridays. It's blocked off my calendar. Now I can choose to work on Fridays, but like on my calendar, it's blocked off every Friday. It is my free time, and then my business has to fit in the cracks. Meaning I've got to all that other stuff comes first. I'm going on those vacations. I'm going to be at my kids' game. I'm going to be, and then I make my business life work around it. Has to, or it doesn't get done. Right. So if there was an event that conflicted, like a great example, I went to Dealmaker Live, Michael Blanc's event just recently, and we left early, day early, right? Because we're going to Hawaii, and like sorry, but and I would love to stay, but I ain't staying. I'm going to. We booked a vacation, right? And that thing was booked out and put on our calendar first. Those are the things that happen, and then we just follow that process.
Yeah, man, that's definitely. I love you're living your best life. For we can absolutely relate to that sense of sprinting versus marathon. I think we're in that sprint phase, but we eventually aim to not in the too far future be in that marathon, and maybe it's a trade off. So sometimes you're sprinting, sometimes you're in the marathon.
Hey, listen, it's a lot easier than people think, right? So here's a great example. Right, one of the things you can do today, right now, is your iPhone. Right, they have a do not disturb button on this thing, and you should turn it on at 6 o'clock and forget about it. Forget that you turned it on, and it'll be magic. No one will mess with you after 6. And what you do, except for your favorites, so that's why you have a favorites button, and you put all your family and the people that you really care about in your favorites. Those lines can get through, and if anybody calls you twice in a row really quickly, they'll get through as well. But that is an easy first step into getting back your time, because I see so many people on this thing when after 6 o'clock when they probably shouldn't be. They should be engaged with their kids and their families and their sports and fully involved. They let this thing ring and then it gets their attention and it takes them away from the things that are really freaking important. And it's a shame. I would love to give everybody a copy of my book, and I don't even have it on me in my office right now, but it's called Copy Your Way to Success. And the way you can get that is you'll text the word book, BOOK, to 480 500 1127. So 480 500 1127. Text the word book, and I will send you a copy of my book for free.